Hi, everyone, and welcome to Advisor Edge, the GVA Way, a podcast series created for financial advisors navigating the complexities of transitioning from a traditional firm or considering branching out independently for the first time. This podcast will deliver clarity and expertise by answering common questions and guiding you through the services and support GVA provides during the transition process. From establishing your brand to building a client base and managing compliance, we'll provide the insights and resources you need to thrive in your new venture. GVA is a full-service, technology-driven RIA. We are 170 advisors strong across 18 states. We provide asset management, compliance, billing, compensation, insurance, brokerage, 401k services, technology, and more to our advisors. And everything we do is scalable for us and you, as we place technology in the forefront. Perhaps what we hold to the highest regard is our dedication to the end user, our clients. We like to say we are a family of like-minded individuals who hold our clients' financial interests above our own. Thank you for joining us, and welcome to the GVA Way.
All right. Welcome to podcast number 5 of the GVA Way. I have Eric Parnell, who's the Chief Market Strategist at Great Valley Advisor Group. And today we're really going to focus in on asset management, the program itself, operationally, what it means for our advisors, and how it's just grown over the past couple of years. Well, before we get started here, though, the first thing we want to do is probably learn a little bit more about yourself, how you got into this business, a little bit of a background there, and anything else that the user base may find helpful.
Yeah, no, thanks for having me on board today, James. It's great to be here to talk about GVA, talk about the asset management team that we have and some of the work that we do. But just a quick background on me. I've been in the investment industry for nearly 30 years now. It's hard to believe, but came out of college in the mid-1990s, worked as an economist. I took a different route into the investment industry than some others might have taken, but started out in microeconomics, working in antitrust, made my way over to the macroeconomic side, doing macroeconomic forecasting. And it was in the year 2000, June of 2000, that I made my way over to the investment industry.
What do you say?
Yeah, that was perfect timing, right? But, it was really, the timing was really good in terms of shaping my experience in the industry. Because I saw the rise of the tech bubble during the late 1990s as an economist. But coming into the investment industry in the year 2000, as the tech bubble was bursting, I spent my first 3 years in the industry in investment communications. I worked at SCI Investments. I was on their asset management team. So my job was to understand asset allocation, construction, the role of all different asset classes in the investment process, and then to communicate that out to our network of advisors, of pension plans, of defined contribution plans, 401ks, banks, international clients. And it was really amazing to have to go out and give that kind of communication in an environment where the S&P 500 was falling by nearly half. And we were seeing the unwinding of the biggest stock market bubble at that point that we had seen in the last 70 years. It really helped give me a true understanding of risk and the importance of managing risk in the investment process, but also understanding the pain points that clients can experience when it comes along with investing. Not only understanding the return objectives, the fun side of investing, but also understanding how you need to protect clients and sometimes protect them from themselves. So that was a really great experience in terms of being able to see that front line early on in my career. After 5 years at SCI Investments, I made the decision to start my own RIA. And for 18 years, I ran my own RIA. And it was a little bit of a different approach that I took. I was serving clients, managing portfolios, but I was also doing a lot of asset allocation work and managing my own investment portfolios, both for retail and institutional clients. At the same time, I was a full-time professor. I served 9 years at Westchester University and another 9 years at Ursinus College. So teaching courses in macroeconomics, micro, corporate finance, investments, research methods, a senior seminar. I was basically the utility player for both departments while I was there. And that was a great experience that I always talked about how when you have to teach, you are constantly reinforcing the fundamentals of the work that you do. And while teaching, I was able to bring so many of the things that I was doing in my advisory work, my client interactions, the communications, the economic and market research, and bring that into the classroom. And it also helped hone my communication skills. So that brings us all the way forward to 2022, because one of the things that I came to realize running my own RIA is that the world had become so much more complex in terms of running a business in the investment space than it had been 20 years ago when I first started the business. That I could no longer run an RIA on my own. And that's how I came to know GVA. It was through my own needs as an advisor and recognizing that I needed support. Yeah. I needed compliance help. I needed somebody to help me with back office with paperwork. I needed to, cyber technology and E&O protection. And I also needed help on the asset allocation side, to manage all these models myself. So I needed collaboration. So that's really what brings me, that brought me to the start of the GVA experience.
Absolutely, yeah. And we're very happy to have you on board. And I think with that background, because it's such a unique background, right? I mean, having the RIA experience, having the professor experience, dealing with clients is huge, right? Because the connection that you're able to make between the advisor and GVA and explain to them how we're going to help them with their client base, you've done firsthand, right? So like that's huge in all aspects. And I think that's something that gets missed a lot in this industry. If you don't have that client experience and you're constantly just saying, hey, here are the models, we're going to put you in these models, this is why, and you don't really know that behavioral element to it, it can be a little bit of a challenge, right? It can definitely be more of a challenge.
Absolutely. Yeah. I mean, it's one of the things that I always like to say is that an investment model is only as good as the clients or the advisors who want to use it.
Yeah.
I mean, you can have the best investment solution in the world, but if clients don't feel comfortable with it, if it's too complex, or if it's not achieving end client objectives, then it needs to change. It needs to be improved. And that's one of the things that I, recognizing coming into the role at GVA and being in the role at GVA is the client, the end client, and the advisors are paramount in the asset allocation process and the investment process. And having that experience of running my own RIA for 18 years really provided me with a good understanding of what those friction points are with end clients.
Yep.
You can have a year where you generate a 30% return in a portfolio, but if you leave your clients with a big tax bill the coming year, well, that's a friction point for the clients. The clients are upset by that because they have, it's a big tax bill that they have to pay. So that's a recognition and part of the asset management process is not just about the returns. It's also about being sensitive to the gains that you're realizing and generating those returns and managing, trying to manage the tax aspect of the portfolios. Another element is the risk. If you have a great year, 1 year, there's risk associated with achieving returns that are vastly in excess of the S&P 500. Risk is a double-edged sword. And clients, when they're experiencing loss, like we've experienced in the bursting of the tech bubble from 2000 to 2002, the financial crisis from 2007 to 2009, the COVID crisis in 2020, the onset of inflation in 2022, we have these recurring market episodes. They're traumatic. And just as much as clients want to participate on the upside in achieving their long-term goals, they also need to be protected in the short term. They need to feel as though they can sleep well at night, knowing that plans are not being jeopardized by any exogenous event or shock event that's taking place in the markets at any given point in time. So it's not just about achieving returns, but it's also about managing risk. And there's a variety of other factors like taxes along the way.
And I think that kind of blends in nicely with, we wanted to learn about who you were, how you think, what the process is behind it. But I really want to take this time to go over and say, what are we doing here at Great Valley for our advisors? I think we have a general understanding of how you're thinking about it, right? And what tools we're using to do that, right? So we've got a team here that's helping on the asset management side. That continues to grow. In fact, the program has grown significantly over the time, which we'll talk about shortly. Mm-hmm. But what are you and the team doing specifically to help the advisors grow, right? That's from, market updates, putting out communication, helping them with thought process around more customized approach versus just, hey, here's the model and call it a day, right? We're doing restrictions. Absolutely. We've got all-in pricing, asset-based pricing. So what else in addition to those things are you and the team doing to help our advisors or help advisors joining the platform now who say, hey, I'm going right into asset management?
Absolutely.
What does that look like?
No, that's a great question because one of the things that I came to learn not only running my own advisory, but also being a college professor for 18 years is that every client is unique. There may be commonalities that exist across clients, but every client has their own unique goals and objectives. The same thing's true with advisors. Every advisor is unique, and the way that they've built their business and the way that they want to manage their business going forward is unique. So the first thing that we see on the asset management side when a new advisor comes on board is, how exactly do they run their business? Truly taking time to understand the individual advisor and what makes them tick and what their priorities are. Because the only way that we can best serve each advisor is taking the time to understand them and what they want to achieve and how we can help them.
Correct.
So for some advisors, we're having a conversation and, their support that they may want from the asset management side is limited. But for other advisors, they want a meaningful amount of support and getting a true understanding of exactly where we can plug in so we can curate and customize how we're providing that support. So, once we get to that point, then we're talking about things like implementation to say, okay, say you want to use the asset management program. Well, what's the best way that we can implement that for you? And each advisor has their own transition strategies and the way that they want to transition their clients. As you mentioned before, talking about restricted securities, there are some advisors that say, hey, you know what? I want to sell. I want to serve my clients. I don't want to have to worry about the asset management solution. We'd like for GVA to take care of that for us. And, in terms of how you see best fit to allocate the portfolios, go ahead and do that. And we do that in collaboration with the advisor because they're plugged in at all points along the way. Yeah. There's other advisors that may have clients that have low cost basis securities where they say, okay, I have this portfolio, but there's positions that we simply can't sell because of the tax bill that they're going to incur. Well, we restrict positions and we will build the asset allocation so that it's hitting the target equity weight, the target asset allocation weights, but not selling those positions so that we're not realizing a tax bill for the clients. Our goal, wherever possible, is to be tax loss neutral so that advisors can fully transition their books. We're still, managing the portfolios. We're overseeing those positions that have to be restricted, but still achieving that objective of releasing that need for them to manage the asset allocation. We're taking care of that for them. Another thing that we can really provide, given our size and scale here at GVA, since we're managing assets for so many advisors, is what you mentioned with asset-based pricing. If you're an individual advisor and you're managing the portfolios by your own, not only is it a lot of work, but the trading costs can really start to rack up because of the size of assets that you're managing on the platform. For us, since we're able to aggregate so many client advisor portfolios and client portfolios, we're able to utilize asset-based pricing where we can manage a portfolio and make changes.
And not only, sorry, I didn't mean to cut you off, I just want to make sure because this is a huge topic. We're trading individual equities in these portfolios, right? Exactly. So we're running, and on the next podcast, a little teaser out there for everybody out there, we're going to talk about a little bit through the performance of these models, right? The thought process behind the allocation, the breakdown. But for today, just keeping it very high level, these models are blends, right? Equities, ETFs, maybe a mutual fund or two that's in there. And then we're running individual equity portfolios, and that whole cost that goes into running them is part of the overall program fee.
That's exactly right.
And it has only gotten better, right? I feel like this whole industry is seeing a shift in, what's the fee? What are the expense ratios? Those are things that are through the screening process we're doing to make sure that the advisor can effectively communicate it to their client as well. There's no hidden fees. There's no hidden costs.
Yeah.
We tried to bundle everything into one clean price for that advisor so that they can effectively, charge the appropriate fee to their end client.
No, I mean, it's such a good point because it's always been such a big thing for me throughout my own career is investments in order to optimize returns for investments, costs need to be managed. Costs should be
Absolutely.
low. And that's part of how we build our model portfolios, is that, through the GVA solution, we're able to keep advisor and client costs low. And through the way we construct our models, we have an eye towards cost, because that embedded expense ratio that exists within inside portfolios, that should also be as low as possible. So in our portfolio construction process, not only are the trading costs to advisors and clients included in the asset management solution that we're providing, but the way that we construct portfolios, we seek to keep those expense ratios and those internal costs as low as possible. So the fact that we're building stock-only portfolios where we're using individual stocks or individual bonds in the models, well, if we're managing a portfolio of stocks, which, and we'll talk about this next time, effectively in synthetic ETFs, the expense ratio goes to zero. If we're going out and buying individual bonds and building individual bond portfolios for your clients, the expense ratio goes to zero, and that's huge.
That's huge. I mean, and that's a big factor in this. And I know that a lot of the decisions that are being made have now shifted to the investment committee, right?
Yes.
And there's multiple meetings that are taking place. It's not like Eric Parnell is making every single decision on behalf of the firm, but you're rather meeting with a group of 8 folks on a monthly basis. I'm one of them.
Yes.
I really enjoy those meetings. Mm-hmm. And then you're also having meetings outside of that with former colleagues, right? To go through and say, hey, is this the best fit for the portfolios? Do we feel like this is going to be the most appropriate? Something that we will dive into next week.
Yeah.
We hit taxable gain considerations. We didn't talk about dollar cost averaging, but I do think that that's a good opportunity as well on the follow-up call here. Let's start to wrap it up, right? Because I think this was a really good first discussion around the asset management program, kept it more high level. Final thoughts, right? Give us some final thoughts on the program itself and where you kind of see it going, and just anything that you think the audience would find helpful.
Yeah, no, I mean, the growth of the program has been tremendous, and it's really a testament to GVA. It's a testament to your leadership. It's a testament to the collaborative team effort that we have on the asset management side. I mean, you mentioned the investment board, and one of the things that's great about that is constantly questioning from the executive level to the advisor level to the internal research level, the construction of our models. And I think a lot of that rolls up into, I'm the chief market strategist of Great Valley Advisor Group. Included in that is being the chief investment officer, where we're managing and monitoring these portfolios on an ongoing basis. But also included in that is the economic research, the market research that we're providing to our clients and our advisors, the communication, as well as the collaboration. It's one of the things that I love so much about this role, is that we're not building portfolios in a vacuum here and just pushing them out to advisors and saying, okay, this is what you have, and go ahead and implement it.
Yep.
When we're building out portfolios, we're not only collaborating internally with the investment board and the different checks and balances on the investment program, we're talking directly with the advisors in terms of getting their feedback to say, hey, what works here with the investment solution? What do we need to change? What do we need to make better? It's that full team participation that includes our advisors and even their end clients that really helps us make what is the best solution that I think we can make.
Absolutely. So this was great. I think this was a good first step. Really appreciate having you on to this month's podcast, and we look forward to having you on next month as we talk more about the models and some of the thought process that goes into it. So,
this sounds great. Look forward to be back.
All right. Thank you, Eric.
Thanks.
The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision.